watching Let's Chat.
Every few weeks on Let's Chat, we get to spend a few minutes with our friend Morgan Hill from Hill & Hill Financial talking about all things financial and how it will benefit you, not just now, but further on down the road. Morgan, good morning and good to see you.
Always a pleasure, Chip.
The two topics we're going to cover today, charitable deductions and wealth distribution.
You bet.
Let's begin with charitable deductions.
Yeah, when I was here a few weeks ago, we talked about a huge piece of sweeping legislation that was passed January, basically December, but enacted January 1st, 2020, called the Secure Act. And one of the things I want to talk about, this wasn't necessarily part of the Secure Act, but it's just kind of come to the fore, and that's what's called qualified charitable distributions.
Which is going to affect a lot of folks,
Absolutely, affecting people's taxes, so that's kind of the topic today. Well, many times when we have these retirement accounts, you know, the whole notion was, well, let's save with pre-tax money, you know, 401ks, 403bs, because the thought was it's going to, you know, let's get the tax deferral now because it will be cheaper later. Well, what a lot of folks have found is they may not need these distributions. They've done really well. And so they go, well, if I have to take a distribution, it's just going to increase my taxable income for the year. So qualified charitable distributions is a process where once you reach 70.5, you can actually donate directly from your IRA to the charity of your choice. So it won't come to you as a taxable event. Now, you don't get the deduction from the charity, but it's a great way for folks to do good in their community with their church, their synagogue, their civic organization, and they don't, you know, have that taxable event. So it's called a qualified charitable distribution, and more folks, we're getting calls left and right from people go, hey, I want to do that, how do I do it? And so just a great tax strategy.
As a quick side note, for those folks who make ordinarily throughout the year charitable contributions, are they going to be able to be deducted on this upcoming year, or is that a case-by-case basis?
Case-by-case, great question. It's more of a case-by-case basis. When the new, they call it the Trump tax code, when that came out, the standard deduction really just got so high that sometimes itemizing and getting those deductions isn't necessarily as tax advantaged as it used to be. So again, this qualified charitable distribution is a strategy for folks that are still charity minded to be able to continue to give, and at least if I don't get the deduction, I don't have the increase in my income. And so that's a great strategy for folks in 2020.
Wealth distribution. A lot to know, regardless of whether you think you have a little bit or a whole lot. Where do you get started on
this new piece of legislation really did a number on what's called a multi-generational IRA. Bottom line is, if you have an IRA, I have an IRA, we can pass it to a surviving spouse with no problem, and then ideally we would pass it to those people we love whose pictures are on the fridge or on the mantle. And basically it's called a multi-generational IRA, where they can inherit it and continue to take distributions year after year, sometimes for decades. Well, with this new legislation, basically the government and the IRS said, instead of having decades to distribute this money, you now have 10 years. Which we've had lots of conversations, and we're beginning to resurrect discussions with folks about, do you want to do a Roth conversion from your IRA to basically say, I'll take a little bit of a hit of tax now in order for it to be tax-free forever. And then another strategy we've been looking at is for some folks who start taking that distribution chip from their IRA, they actually can use the distribution to pay for a life insurance premium, the proceeds of which pay tax-free to your heirs. So you could use that tax-free income to pay off the tax that is now due that maybe heretofore you didn't have to worry about. So all that to say, this new piece of legislation, there were some benefits, but there are also some tax strategies that we think the folks should be aware of and be having conversations about to make sure that those that they love get their stuff, not those they don't.
All right, I want to give you a few seconds to plug where you come into this picture, because obviously something like this, it's over the head of a lot of people, and you could be a gazillionaire. But when it comes to properly making sure that your assets go where you want them to, you need to go to an expert.
Yeah, we're blessed. We're a full-service retirement planning firm. I have education and credentialing in the area of tax and law, but I'm licensed in the area of investing, as are members of my team, risk management. We have a wonderful team of CPAs. We have a wonderful team of attorneys, but many times these little sections of the tax code get lost in the shuffle. And so we encourage folks, if you're working with a certified financial planner, this would kind of fall into their wheelhouse. A full-service retirement firm, you just have to ask the proper questions to make sure it's not just, well, I'm going to get sold this product or that product, that you're actually getting some good tax planning strategies And that's the key. So just ask really good questions, and I think the folks that they would work with can answer them for them.
You have a great book that is available, and we're going to give you a copy of that book right now for the first 10 callers,
Absolutely,
correct?
absolutely.
And the number to call, 800-887-9647. Again, 800-887-9647. Make sure and check out Morgan and the team at Hill & Hill Financial. We'll be right back.